All right, good morning. How are you? My name is Wayne, and I'm in this thing called Forex.Today. Thank you for being a subscriber. Thank you for all your positive energy and hard work that you throw into this thing called Forex. So without further ado, let's get on with it. Let's go! Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, always stay humble, stay small, never risk money you cannot afford to lose. Be careful, be thoughtful, be cognizant. Hey! Cool. So let me do this. Let's do a poll. What do you want to cover today? What do you want to cover today? News calendar. Commitment of traders report. Dollar pairs, commodities / crypto. Okay, that's good. So I'll start with that. So look for the poll. Boom. All right, cool. So, hey, why are we here? Well, I have 20 years of experience trading Forex. I have a background in technical analysis and fundamental analysis. Very cool. So I'm trying to teach you how to put together thoughtful trade plans for tomorrow. Not for today. Today's already done. If you don't know what's going on today, you've already lost money. Or luck has crept into your trading and you got lucky and you made money today. But don't worry, you'll give it back tomorrow. So here's what we need to do. We need thoughtful planning for the future. That could be later today, that could be tomorrow, that could be next week, that could be next month, that could be next quarter, between now and the end of the year, that kind of thing. And even we can plan, even farther out than that. But really what it comes down to is what you are doing today to make money is what you planned yesterday. So in the next 4 hours, London's going to close, so you only got 4 hours left of the day. So yeah, you might be able to squeeze one more trade, maybe two more trades in for today. But therefore, since there's 24 hours in a day and there's only 4 hours left in today's trading day, then really we should be thinking about what's going to happen on Thursday, not Wednesday. Now, when we do go through the calendar, you'll see there are things going on today like durable goods. I don't really care about, oil inventories. Okay, that's interesting. But ultimately, that should have been your thought process yesterday. So ask questions, get involved, take notes, and I will do my best to help. These live streams on YouTube, they don't cost you money, but they do come with an obligation. Would you please visit tradersway.com and open up a demo account? This is going to be good for you. Why? Because eventually you're going to want to trade real money. Yes, you might choose a broker because of cheap spreads. I don't recommend that. I'd say competitive. You don't want to overpay. Fast execution speed, which most brokers don't have. Swaps is a big deal. And I'm telling you, I keep seeing brokers that just don't pay swaps or charge you either way. They collect money and then charge you for it. Like, what the heck? That obviously doesn't put clients first, right? That's not in the best interest of clients. Right? But ultimately, it's going to come down to trust, loyalty, and respect. Traders Way has earned that from me. And I'm like, hey man, give them a shot. Maybe they'll earn your loyalty and respect too. Okay? So don't take my word for it. Make your own decision. Do your own due diligence. Start by visiting tradersway.com and open up a demo account. Make an informed business decision. Because you're a businessman. All right. All right, so good morning to everybody. I see lots of happiness and politeness. Namaste. All right, so let's take a look at we have 34 votes. That's barely statistically relevant. Could we get a few more votes, please, on the poll? Okay. News calendar, commitment of traders report, US dollar pairs, commodities, and crypto. Please take a few moments. It's very, very, very close. So you need to vote. Right now it's either dollar pairs, go straight into technical analysis, or it's right into COT and doing fundamentals. So if you feel strongly about one or the other, get in there. Come on now. We have 48, so once we hit 50, that'll be statistically relevant. 30 is the key number for statistics. All right, we got 51. Okay? Chan, can I cover? No, it's already done. You've already missed it. I've talked about it every day for 90 days straight. I'm done. It's over. It already happened. So, right? No, I don't want to talk about it again. Not today. I guess I'm just worn out. I mean, it's just so 3 months ago. All right. What do you want to cover today? Dollar pairs. Dollar pairs wins. Now, it was interesting because it was 45-45 for a while or something like that between dollar pairs and COT. COT dropped. People must have, well, I guess more and more people voted dollar pairs. So we'll just go right into technical analysis. First of all, dollar is a bit strong over the last few hours. It was I think I made a few trades in Asia, and they're all profitable, but barely. So Europe kind of did the same thing today as it did yesterday, where, you know, all those trades are up 50 pips, and then I come back and they're up 12 pips, right? And then today, boom, they're all up again, but they all came back down. So we're still trying to figure things out. Remember, we talked about this. Not everyone has the same alpha. Not everyone's correct. A lot of the market participants are going to be incorrect. And so we're still trying to do this price discovery where the dollar's been strong and now suddenly it's weak for 3 days in a row. Hey, which was part of our plan. But it doesn't mean it's going to stay weak for another 3 days. It may come back, right? There may be, I mean, not everyone's figured it out yet, right? And I even told you in, I don't know, pick a month, May. I told you in May that you're going to want to be longing these things around the third week of August, but I said be absolutely, totally, emotionally, psychologically, and mentally prepared for that first move to not be the move. And so anyways, I kind of see that happening. The other thing, I don't know if you trade Asia, but Shanghai gapped up for the third day in a row. Gapped up. Okay? Those ADR stocks are up 30%. I hope you bought them. Do you remember that 2 weeks ago? I'm like, are you going to do it? Are you going to do it? Are you going to do it? Boom, they're all up 20 to 30% in the last 3 days. Huh? Right at the end of the third week of August. Right? Third week, you could have been a buyer. Shoulda, coulda, woulda. Anyways, amazing timing, right? All right. So anyways, so dollar was strong, then it weakened. Now it's strong, and yen has been the better trade. It was strong this is sort of London close, and then Asia open, London open, and now there's some pausing. Okay, fine. Okay, we don't know how long that's going to be, but, okay, I gotcha. That makes sense. Okay, CAD has come down, which is disappointing because other commodity currencies are up. So there's something going on in Canada to affect the value of its currency. Aussie's been a decent performer again. Kiwi's been a decent performer again. Pound has been a decent performer again. And Euro. And the interesting thing is being long Euro pairs, like Euro dollar, Euro yen, I made with the assumption of weak dollar, weak yen, and I haven't gotten both of that consistently, but the Euro trades are okay. They're okay, but they're not good. So, nothing to get excited about. No reason to, go ape crazy with the trades. Okay, so let's start. Yeah, well, let's start with the dollar-based pivot points. So here's that. Let's start with euro. Euro. Have I told you that you're my euro? Okay, check this out. This is where bulls buy. This is where bears sell. Oh my God. Oh my God. That's cool, right? Right? We don't know much, but we know this is the exact price a bull would buy, and this is the exact price a bear would sell. Well, that's helpful. What do you guys think of that? Can I get a hallelujah? Look, I even have it marked here. Boy, that's helpful, isn't it? Remember, there was a time in your trading career where you're staring at it like, why did it stop? Why did it stop? Why? It was going so good. Like, what the heck, man? Why did it stop? Well, now you got a little bit more clarity, and you're like, oh, well, I see. That's where bears would sell. Cool, especially if you're a bear. All right? At least it helps explain the phenomenon. Okay? It seems pretty reasonable. Okay? So you could take your profit, or what a technician might be trying to do is to say, we've breached the 55. Therefore, okay, we're on our way to the future 21, or 200, I mean, which is kind of like not quite 18, okay? So there are some technicians that are going to try for this, okay? There are. I don't know if there's enough. So your decision-making process depends on how bearish you still are. And therefore, if you were, you could have booked some profit here and then waited for an entry here or here. You got it? Well, Greg says he's been waiting all summer for Aussie and Kiwi to strengthen, but with the lockdowns, that ain't going to happen. But remember, so like just the other day, I talked about the consensus, okay, being here, and professional traders cannot be consensus because the consensus is market, so you might as well just trade an index, right? So like the analogy is some people are passive and just buy the S&P 500. That's good. Now, there are hedge funds that can't just buy the S&P 500 because after fees, they would underperform the S&P 500. So no one would ever invest into a hedge fund that just tracks the S&P 500. Okay? They would buy the index. So a hedge fund, by definition, wouldn't trade the consensus, but is trying to develop alpha, which is performance, by trading on the periphery, if you like, buying it when it's way oversold, selling it when it's way overbought. And so my thought, Greg, is that you know, people understand there's a lockdown. That was so, 5 days ago. And at some point that gets priced in, okay? And then it becomes oversold. And there's going to be a propensity to want to at least trade on the periphery and maybe hope for fundamentals to come back because, you know, the Aussie's already been discounted based on another closure. So at some point, behavioral finance will tell you that people will buy stuff because it's cheap, because they want to hold it for 5 or 6 or 7 years. And in the future won't have that current lockdown. So there's the now, the Aussie comes down, and then there's the future, so you buy it cheap. It's just like those Chinese ADRs. I told you, dude, all these high-tech companies out of China were down 50%. So if you were going to hold it for 5 years, maybe that 50% discount is worth the current risk of the Chinese government, you know, flexing its arms. So anyways, so you don't always be in the now, Greg, I guess is what I'm saying. So you're right, Aussie's been crushed, but I'm up over 100 pips on some of these Aussie trades. Aussie dollars one. I don't think it's on this account though. Here. Okay. It's the same as the euro trade. Okay. So this is the lockdown in Australia. Great. So I bought it somewhere in here. Okay. And now I'm stuck sort of here. I think I tried a reload on this one. And so I'm hoping for this, and I'm worried about the top there. Why am I worried about this top? Well, first of all, it's done this, but look at where it's done it. This is the bearish selling price. So bears live there, and I can see why we're topping out here. So I really got one more day trade left before I give up. Okay, this is going to kick off here somewhere and then work its way up. Or I'm going to take a loss on the first one and probably take profit. No, take a loss on the second one. You know, a loss, I don't know, 12 pips. And then take this one, which will still be roughly 100 pips. Done. Okay? And this is the future trade. This is the now trade. And so if you can see, like, if you look at this in blue, okay, let me make this a little bigger. This is the consensus. Everybody agrees it's a downtrend because of the lockdown. But I'm not trading the consensus, right? And someone else higher up is probably going to try to do that. And if there are more bulls and bears and the fundamentals take over and people say, oh yeah, well, the lockdown happened, Aussie's been discounted, but it's going to open up again, and there's a lot of demand out of China, and there's a lot of, and all of a sudden the narrative goes from all pessimism to all, you know, glasses, you know, what, half full, then, you know, when the narrative changes, this will lift off, or it doesn't. Okay. So anyways, that's for Greg, but for everyone too, right? Where I believe that long-term trend, well, no, that wouldn't be right. Again, the difference between consensus and trading beyond the now. Okay, cool. And so the Aussie trade is exactly the same trade as this trade. And you can see it's held up exactly the same area. Aussie and Euro are exactly the same. Okay? Same time, same price, right? So it's been normalized, if you will, right? The average daily range between the Euro and the versus dollar and the Aussie versus dollar, they're going to be different. Maybe they're close, maybe they're not close. But when you normalize things, and the pivots are kind of doing that, based on the previous market, these are expectations of where a bear would sell. And guess what? That's happened. And the same thing on the Aussie occurred. Exactly the same entry, same stall out. And so there's on the short run, there's only two things. There's this and there's this. Okay? One of those teams is going to be right. Or in fact, both can be right. It could be up here and then all the way back down. Okay. So the challenge for a bull is, when do you give up or when do you not give up? Okay. El Pastor is like, hey man, I'm looking for a double bottom. That's fine. To me, that's not even the issue. The issue is, are bears selling here, or is this bulls taking profit? If it's just bulls taking profit, the bulls are going to buy back. So this is not likely to happen today. So that's not really interesting to me. It would be like, we're trying to figure out right now, are bears selling these tops? And the issue for today is down through the central. Okay. Is that what's setting up for today and tomorrow? And if so, I might want to just take some profit, or, like even holding for a double bottom wouldn't be the right strategy for euro dollar. That'd be a guess. That'd be a bet. That'd be a hope. And hope is not, a risk management strategy. So, I'm watching this carefully. And I'm also emotionally preparing myself to say, look, if this drops below some of these, I might bail on a trade like this and then be okay with it going up, because I'm trying to train myself not to make decisions based on, I really hope it does this. Okay. If it makes a lower low, I have to get out, because now I got a double top at resistance with the lower low. Well, shoot, I better take my money and run. Okay, the market doesn't care. It's only 50 pips. Just get out. Okay. So if that's that, if this makes a lower low, well, there's nothing I can do about that. It made a lower low and I have to get out. Done. MoveOn.com. Okay. Okay, now, so piggy is exactly the same as well. Exactly the same as Aussie and Euro. Double bottom at the end of the third week. Kicks off the M2. Okay. Slams into the M3 and we're done. Isn't that amazing? Great British pound. Aussie and Euro all went from M2 in the first hour or two, first couple of hours of the week, and now we're hung up on M3. And the interesting thing is, we know bulls buy here, bears sell there. Okay. Okay. Cool, right? So if you're thinking this, that could happen. That could. But I would probably pay attention to all three of those pairs. If you take profit on one, you'd take profit on all. Okay. Looking at Kitty Cat, time for Kitty Cat to give back. So let's go through sort of a process here. I'm a bear. So let's start with position bearish. Okay. Not a bearish month. But let's play with the, well, yeah, it's pretty close. It's close to next month. So it's not a bearish situation yet. We know this is the out. Okay. We already know that's the out. That's the M4. So you should already know this. Now, the next thing we should do is keep changing the time frames. So you go to indicators, bias pivots, go bearish mode monthly to bearish mode weekly. Okay. And you can see this week was great. for a sell, but it was also the monthly, so don't get all caught up on that. So here's a confluence. So let's put 2 here for the confluence. So we can see this area is extra special. Let me move it a little closer. Okay, so that's extra special. And now let's move this again. Okay, and we're not ready yet. So I would say, okay, I would say sort of in this zone is probably next week's sell. Okay. Okay. CAD is driving at the moment. Well, CAD is given back for sure. Driving isn't the right word because it's losing value. So it's not driving. It's not leading. That's what driving would mean. It's not leading. It's giving back. It's, it's the dead horse. It's not the horse out in front. But anyways, okay. Okay, let's take a look at commodities and see if oil's coming down. Okay. And this is what I said earlier. I'm like, there's something going on in Canada because Canadian dollar should be gaining value, not losing value. Okay. So yesterday, Brent was at 70. Now we're at almost 72. So it's not because of commodity prices. Okay. Gold stalling out here. All I know is I don't like the lower low. Okay. So what I'm doing here is I'm gathering price support and market support. The pivots are market support. Okay, obviously I don't have a buy on this time frame, so let's take a look at what time frame that is. That's daily, so how about weekly? Let's do this. And go out a little farther, and here are my prices that I'm interested in. Zoom back in, and this gives me, let's do it differently. That gives me okay. You guys getting better at planning? How many people are getting better at thinking like this? Yeah? No? Crypto miner? No. Well, the crypto miner, all he has to do is have electricity, right? That's all he needs. Time and electricity. Okay. Now, here's the one thing we did talk about on gold not long ago, and that this is the projected top. Okay. You guys remember? The problem is it did it so quickly that it was over by the time it started. So now your real question is, okay, if this may have been difficult to predict, but if you believe it made a higher high, then your next question is, will you buy this? Okay. You see? So we don't know if that's going to happen. The thing is, you need to know if you want to try to do it. Is that your plan? Do you have a plan? Do you have reasoning behind your plan? Robbins says, have never been more calm. That's cool. Okay. Bitcoin's at an interesting price, so I got it all marked up. Okay. So what do you think? The area that I'm looking at, my eyeball is attracted to this. Okay. Okay, and Fibonacci would measure this distance. And we're close, 3A2, 50%. A little lower, 618, right? So, oops. We're kind of looking at a Fibo this way. So, what do? You buy it and wait for Elon to send a tweet? Shots for everybody, Highlander. Yeah, that's cool. It's an inside joke if you don't know that. One time Highlander was in one of the trading meetings, and he's got his webcam on and he's listening and everything's great and I'm talking, and all of a sudden he gets up and he walks and there's like a desk behind him and a grinder and he's putting wheatgrass in and he's making a shot of wheatgrass juice. And I'm like, oh, no way, man. So anyways, it's pretty funny. So there you go, guys. What do you think? Are you a bull or are you a bear? So the challenge is, on this time frame, it's down. Okay. On this time frame, it's up. And we also know the previous time frame, it's up. So you got to know what you want to do. You got to know who you are. You got to know what you stand for. If you don't stand for something, you'll fall for anything. Okay. So that's that. Yens. Let's do some yens. Oh, I only got 3 yens here. Interesting. Cool. Let's see. On the last day of the 3rd week, we hit the projected low. On the first day of the 4th week, we rallied like I talked about 6 months ago. Well, that's interesting. Cool. Up, and now here's the interesting thing. We might be breaching the M3. That's the price in which a bear would sell. And if we breach above that, that means we've taken out all of the bears. Think about it. What does that mean? Well, if there are bears here, they're actually selling. If you don't pull the trigger, then you're not a bear, you're an observer. So think of it, as we're there, bulls were also buying. Okay? Answering the bearish challenge, and then all of a sudden there's just no more bears. We took them all out. Okay? There's none left. So what happens is these guys offset, 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 offset. And now all those sell orders have been filled and there's just more buy orders behind it. And the interesting thing is, based on correlation, one would assume or expect that if Aussie yen is breaching above this, the dollar pairs are probably going to do the same. So I might look at this really closely and say, well, if the Aussie yen continues up, I'm not going to bail on my euro dollar, my Aussie dollar, so on and so forth. Okay? That's my thought process. Doesn't mean it's right, but this is how I'm interpreting what's happening. Okay? Okay? Kitty cat. Okay? It's got to hold or it ain't bullish. So if you had a stop, you could drop a stop and say, really what you're hoping for right now, because the psych level's been tested. So really what you're probably doing more likely is you've jammed your stop right about here and it's 0 or 0. It's got to go up here now or it ain't going to go. Okay? So what you're doing is watching the higher high, watching the alligator, and a bull scalper is going to buy it like this and then buy it like this. Okay? And all bulls are gone below that price. Okay? Probably going down there if that happens. Okay? Okay? So mark your role reversals and stuff. Okay? CAD's been weak all day. Doesn't mean it'll be weak in the future. Well, anything I'm trading, when I make a decision, I'm making a decision here. But when I pull the trigger, I pull it on here. That's why. Okay. So this is strategy. This is tactics. So that's the name of my book, right? Strategic and Tactical Forex Trading. So I make my decision here. That's my strategy. Okay, land the helicopter here, run down these streets there, turn right on this other street, go down this alley, kick down this door. Okay, strategy. Tactics is actually kicking down the door. Okay. Yep. Cherry bombs, that's interesting. Yeah. Flashbangs. Boom. All right. And I don't know why we're lacking here. So let's add a euro. Oops. Let's add a euro. Have I told you that you're my euro? Okay. So what's the trade plan here? Okay. That's how I see it. It's more quarter to quarter than month to month, Mohammed. Efren says, if it falls below 86.82, is it a good sign for entry? No. Because now it's already happened. Let's go back to that. Let me say it more bluntly. Okay? If you're a bear, you sell high. Okay? So you're either selling this top or you're selling the reverse fib. Okay? If you're a bear, you're selling for completely different reasons. You sell there, you sell there. And if you're right, you take it down. If you're wrong, where's your stop? Here or here. Okay? Not a big deal. Now, what I hate it. And I'm a lover. There's two things I hate. I hate, and then I hate sloppy, poor, lame-ass trading. And I think most people are taught this lame-ass trading strategy of let it break and now sell it. Well, what the hell? Now you got nothing left. It's so late. Like, right? I mean, it's just terrible trading. So, you sell the lower high if you're a bear. Why? Because you're already a bear. You don't sell it because it made a lower low. Okay? And I'm not picking on you, Efren. I'm trying to make a point. Okay? What is the universal truth of what bears do? Okay? What do bears do? What's the universal truth? Sell high. That's the universal truth. So I hate it when someone is taught to wait for the lower low and sell down here. That is dumb. It's dumb. It goes against the universal truth. Nobody is supposed to sell low. You need to do that. Get into the real estate game where you pay more money for a piece of real estate than any other bidder. You're the one that paid the most. And then you hold on it for years, hoping that it will go further up, and you sell it to some other idiot that will pay far more money than anybody else to buy it from you, which you bought it for far cheaper in the past. If that's the kind of game you want to play real estate. And the nice thing about real estate is it's also leveraged. Cool. But if you're a financial market trader, it makes no sense to sell low and buy high. We know it's wrong. So unfortunately, people are taught differently. And it's the danger of listening to some kid on YouTube. Right? It's the danger of listening to some kid on YouTube. Okay? He's got a Lamborghini, but no retirement account. Okay? He's leasing his Lambo, but he's not saving to send his kids to Harvard. It's nonsense. It's childish, stupid money. It's not wealth. So, if you're going to do it right, do it right. If you're a bear, sell it high. Why do you know to sell it high? You're a bear. Okay? So how do I handle this as a bull? I knew exactly what to do here. Why? I'm a bull. There's only one thing that bulls would do. Buy the dip on this gray zone. Done. Okay? But it's buying low. Do you see this? The setup is here. The setup is here. And I'm taking it up here. But now if someone else waits for it to come up here and then start trading, dude, I'm exiting up there. You see the difference? If I'm buying low and you're buying high, I'm going to sell it to you overbought. And by the way, you guys may have tested this where you buy it high and then all of a sudden you're negative 25 and it takes a while to get positive 25. It takes hours to get it. Well, it's because I'm giving it to you and I'm plus 50. So I give it to you, suddenly it's back to negative 25. But we also know most people can't take the negative 25 and they exit for the loss. And then, of course, I buy the role reversal. So what I teach you guys is you buy the dip and you buy the dip. Okay? If you're a buyer, you buy low and you buy low. Some other person's going to buy it here and exit here. That's exactly why one person makes money and the other doesn't. Okay, the buyer buys it here. Okay, someone else. So buyer number one is here. Buyer number two is here. Now buyer number two takes a loss and buyer number one comes back. So buyer number one gives it to buyer number two and then buys it back from number two and then takes it back up. I want you to think about that. This is not my opinion. We know it's a universal truth, right? Okay? We know it's a universal truth, but very, very, very often what you see is totally wrong. Okay? I've analyzed like thousands of trading strategies, and I would say most of them forget that one simple point. Are you a bull? I don't know. I trade everything. Well, good luck. If you're really good, you'll break even. Okay? But now imagine you're a bull and all you do is buy higher lows. And if it makes a lower low, you stop buying. You're going to do just fine. You see? That's all you do. You're a bull. Why are you a bull? I've analyzed macroeconomics, monetary policy, global money flow, seasonality. I looked at all this stuff and I flipped a coin and it told me I'm a bull. Good. Great. Now you're a bull. So what do you do as a bull? What's the universal truth? I buy higher lows. And then once it makes a lower low, I stop buying. Where do you take profit? Places where a bear would sell. Or I just ride the trend out until the trend dies. Like, wait, that's it? Yeah, that's it. That's my strategy. That's it. Yeah. So you declare you're a bull. Uh-huh. And you buy higher lows. Right. If it makes a lower low, you stop buying. Right, because it's no longer bullish. And you take profit at resistance where bears would sell? Yeah, or I just ride it out till the end of the trend based on seasonality. Well, that sounds easy. That sounds obvious. I know, right? Okay? Okay, David. David says, Wayne, please. I work full time, so I trade the 4 hour with limit orders. Great. How can I take multiple take profits? I can't use multiple orders because too often they don't get triggered and I'm well, I do like, yeah, it's all done right with OCOs. Okay. Okay. So you do this. Okay. My stop is 25 pips away. My limit is 50. Now, of course, you can change all of that. That's just arbitrary. I very often do 33.99. So let's do that. 33.99. What does this mean? It means I can be wrong 66% of the time and not lose money. Boom! Dang, I like those odds. Okay, so now you're like, buy. And there's the order. Okay, I'm on now. Have to go farther out. There's the stop. Go farther out again. And there's the limit. Okay? That's how you do it. Now, the reason I'm running that as a EA, by the way, this is out of my day trading course. If you want that, it's free with the day trading course. It also will work with a limit order. And so very often, David, when I'm trading Asia, okay, my buy zone, like my daily pivots will be there, but price will be way up here. So very often I watch the Shanghai Open. I did last night. I did the night before, you know. Okay. And what I'll do is, if I'm not going to be at the charts, David, I'll throw an order near there, making sure I'm running. So you have to look at auto stop smiley face. Okay. Make sure it's running so that if it comes down, the working order converts to a market order, and then the market order triggers your 33 pip stop and your 99 pip open. And sometimes if you're like pound yen, you wake up and the trade's not in and you're like, oh my God, did I lose money or make money? You have no idea with pound yen. Okay. But more often than not, what you'll find is you're at least halfway to your target. So by New York, you're kind of either New York or the next day, you're moving your stop closer to break even. Okay. And that's how you handle that. Make sure your lot size is low. Make sure your risk reward is favorable. So again, if my average winner is 99 and my average loser is negative 33, okay, I can be wrong. Okay. 6.67 trades out of 10. And be at break even. Minus your costs or whatever, but basically break even. Isn't that? So it comes down to now, David, over time as you practice, can you get better than right? You know, six, almost 7 trades out of 10 being wrong. Could you get it down to 5 trades out of 10 being wrong? Half are wrong, half is right. You're profitable. Just like that, you're profitable. Why? Half your trades are wrong, but the other half are worth something. One of the challenges a lot of amateur traders make is the winners are still worthless. Like, who cares? Like, you're risking 33 to make 28 or 13. Or the guy with 97% winning average, right? His average winner is 7 pips, but he's got 2 trades that are negative 200 each. Okay? Whatever, man. Okay? So let me get rid of this. This is a working order. Okay? And so now I'm risking 33 to make 99. Okay? And that's how I trade in Asia. And just take the day trading course at FX Bootcamp. Okay? There's a very specific time and strategy that I trade for Asia as a day trader. Then inside of that, there are market opens, but you know, the Asia Open is a lot different than the London Open. So it's not really that. I'm day trading it without volatility. And then if you're trading London, that's going to be a vol trade. Okay. Right. And what you see things is like, you know, I was a buyer here and it went really good. And then London took it down and then it farted around. Right. Right. And then I bought it here and then London takes it down. But maybe, just maybe, if my analysis is correct, despite the vol, the trend is correct. And my analysis tells me, right, to start buying it here. And here's the alligator rollover. And the target is here. So the plan, we knew several days ago now, is to buy it at 85 and take it to 88. Okay? And so once you have confirmed that using your technical analysis, as a trader, what you're doing is, okay, there's your first buy, there's your second buy, here's the third buy, let it run, let it run. There's your next buy, okay, maybe in here, maybe in here, okay, and you're slowly taking it to 88. And so, yeah, it's only 300 pips, but you might have times one, and then, 180 on another, okay, and then, 80 on the third, okay, right? So I don't know, you get one here, you get, well, really, there should be a couple in here. So you must understand that this is your challenge right in here. That's, this on the first day. So you're hanging on, hanging on, hanging on, break out, buy it, boom. It's role reversal, right? So it's really, you might be here, you might be here, you might have skipped that one, but it's clearly an easy trade. But you might be one here, you might be there, third, and then I just took one here, 4, and you'll probably get one more. So by the time we get to 88, you probably have 5 trades. Okay? And right now, CAD sucks. But it doesn't mean it'll suck tomorrow. Or even in New York. It might not suck in New York. And all of a sudden, okay? Now, the interesting thing is oil is rising. Okay? If gold goes up, okay? We're Oscar Mike. Okay? Cool, right? So that's for Davey. Weak trades, who was saying that? Mohammed's about the weak trades. Well, that's the thing. Like I teach very hardcore, very, very specific lessons in FX Bootcamp. And sometimes I'm blunt, like rudely blunt, that if you're not here to make that trade, then you suck. You're not a swing trader. You're a poser. That's the good trade. The other trades are piss poor, late, slows, molasses, you're chewing on the gristle on the bone. You got no meat, right? Like you're either here, make that trade, or you're not a swing trader. Just forget about it. Okay? Forget about it. Okay? Look at this euro. Okay? You bought it there. Why? You're a swing trader. Oh, but, whatever, dude. Right? You got to be brutal as a trader. You got to be brutally honest as a trader. It's like the but I had this issue and that issue and I thought about this and I was concerned about that and whatever. Nobody cares. You got to have that, right? You can't lie to the mirror. Okay? You can't lie to the mirror. So you're setting this up and you're going to sell this as a bear, or you don't have a plan. Okay? Right? Like that's rude and blunt, but dude, you got to wake up. It's so easy to just get stuck here. Mediocrity. The worst part of learning how to be a trader is getting stuck in mediocrity. And the issue is you're pretty good at technical analysis. You're pretty good at fundamentals. You're pretty good at market correlation. So you got it. Like if oil's going up, I'm buying CAD. Okay, you got all of that. I get it. The thing is, it doesn't make you a better trader. It gets you stuck at break even for years until you force the behavioral changes. It's not an intellectual problem. Okay? You don't have to be a genius to do this. You don't need a Harvard education. I got a Harvard education after I was a half decent trader in Forex. I did it because it's something to spend the money on. Okay? You don't need all of that. So at some point, it's a behavioral issue. You do it or you don't do it. And the problem is, at least in the society I live in, it's like, we're good enough, we're strong enough, gosh darn it, people like us, I can do it, but there's no 7th place ribbon. Especially when there's only 6 teams. How did you come in 7th place, right? There's no 7th place ribbon. This is mixed martial arts. You either trained hard, you're in good shape, you have fantastic technique, you've studied your opponent, or you get your ass whooped. You're missing teeth now because you're mediocre going into a ring that someone prepared better for, right? Like it's not, it's challenging in the beginning to figure out the rules of engagement, but at some point you show up prepared and you're hardcore about that. Okay? That's going to be the difference. Okay? Muhammad's like, the problem with me, look, there's no problem with me. What do you mean the problem with me? I'm perfect. I'm tall, I'm beautiful, I'm cultured, I'm modest, I'm super smart. Did I say modest? Yeah. Yep, the problem with me. How dare you, Muhammad? Yeah. Yeah, is the textbook we learned from. But I didn't learn from a textbook, so there you go. So take that with a grain of salt, I suppose. But here's what I think. You sell that if you're a bear or you're not a bear. What's the other rule of engagement? If you're a bull, dude, if you're a bull, what is it you're waiting for? Well, I don't know. I thought if I could get if I thought I could get this and then that 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 and that, I'll buy it up here. No, if you're a bull, why don't you buy it there? Okay? Look at the moving averages. Oh, I don't know. That's not good enough. Why not? Okay? Why not? If you're a bull, I'm not saying you have to be a bear. I don't care if you're a bull or a bear. I care that you execute your strategy with precision. Right? I only care that you carry it out with precision. Because if you were working for me, I might come in and say, Lucas, buy the US dollar versus the Canadian dollar over the next 3 weeks. I have a client that needs that. Okay? So, does Lucas buy it here? Does Lucas buy it here? I don't know, maybe. Oh, but it didn't bounce. Does Lucas buy it here? No. But watching this and waiting for that EMA to catch up, right? The EMA is catching up. The EMA is catching up. Okay? So you might have it like this. So Lucas might say, okay, well, I don't know. It might be early. Okay? Might be early, but, I'm going to start. I'm going to start trying to catch this, and I need to be worried about that. Okay? Because this could be down here. But he understands that. Lucas is like, oh, yeah, well, seasonality, this is going to be a tricky one. But I got the support now. And if it bails here, right, I'm going to jam my stop, and I'll try again if it rallies off of this. If it drops all the way down to here, well, that changes things. So he'll have to come up with a different plan for that. But right now, this is the plan. If I ask Lucas to buy USD CAD, high is bad. This is maybe, but didn't get the entry. This is maybe, didn't get the entry. This is a maybe, roll reversal off the daily 21. What else would there be? So now he's got to spend day and night on 15-minute charts and hourly charts trying to take this north. He's well aware of the threat, but if we breach that, we're on our way, and he's going to hit 130, and he's like, there, Wayne, I did the job. And I say, hey, thank you, Lucas. All right, I'll pay for your BMW payment 1 month. Here you go. 1, 2, 3. Boom. Okay, done. He's like, no. It's not a 3 series. Oh, really? Okay, 4 or 5. There you go. Boom. Did your job. Okay? You should be able to do anything I ask you with precision. I think a lot of you guys get hung up on different decisions and different concepts and different things. It's like, dude, if someone paid you to buy USD CAD, could you do it without losing money? Isn't that the issue? So where's the entry? Okay, where's the opportunity? Okay, opportunity, threat. Okay. Okay. Well, then that wouldn't be a day trade, Mohammed. Okay, that's a market open. So anyways, right, you can see bulls have permission to think about it. Bears definitely want to take something like this. Okay. So anyways, that's all. You guys should be able to do anything properly. Cool. Okay. Go Aussie. Go Aussie. Okay. I'm pretty sure I'm long right here. 40 something. So this is 100, 110, 112 pip profit. Right? Cool. I need this to keep going. Okay. And I think I'm long again in here, which means I'm basically break even on the second one. It was late, but I was playing this. Kick it over the 21. So, right? So the first trade is here. There's a second one here. Right? So anyways. All right. Thank you for being part of this community. Please subscribe. Please like. Please leave comments. Please visit Trader's Way. Have a wonderful day. I'll see you guys tomorrow. Huh? Cheers.